Hey guys, in this video we're discussing how to preserve capital in retirement using real estate investing strategies. If you're looking to maximize your safety and stability in retirement, you're in the right place. By the end of this video, you'll know exactly how to make it happen. You're going to learn how real estate investing can play a crucial role in capital preservation during retirement. You'll also learn when it comes to capital protection, the best defense is a good offense. We're going to talk about how to ensure that market volatility doesn't crack your nest egg. Real estate's a pretty broad term. We're going to get very specific and tell you exactly which assets to focus on. We invest for the long term, but a great investor is always prepared for anything. We'll show you how to stay frosty and make changes when they're necessary. Additionally, you can include specialized asset classes like mobile home parks and parking facilities in your overall portfolio allocation, which can offer unique opportunities for growth and income for retirees with a few baked-in advantages. Namely, the fact that nationwide zoning restrictions and moratoriums on new construction means that there is a deliberately constricted supply of mobile homes and parking lots at a time of increasingly high demand. Said another way, the government itself is keeping supply low. It's artificially constrained, while the demand, due to a nationwide housing crisis and increasing amounts of drivers throughout the entirety of the country, is incredibly high. These favorable long-term macroeconomic favors, those supply and demand favors, ultimately serve as a tailwind on these investments. And I have a lot of investors looking to preserve capital in retirement. They breathe a sigh of relief knowing that these long-term favorable macroeconomic tailwinds help to contribute to outsized risk-adjusted returns over time. Of course, each type of real estate investment comes with its own set of risks and rewards, so it's important to strike the right balance in your portfolio to optimize returns while minimizing risk. In order to find the optimal real estate allocation for your retirement portfolio, you need to determine your risk tolerance and investment goals. Here's how to do it. Determining your risk tolerance and investment goals as a real estate investor is an important first step in developing a successful investment strategy. Here are some steps that you can take to determine your risk tolerance and investment goals. Evaluate your financial situation. Before diving into real estate, it's important to evaluate your financial situation. This includes assessing your income, your expenses, your assets, your liabilities, knowing your entire personal financial statement. Understanding your financial situation, it's going to make you more aware and better adapt. Understanding your entire financial picture, it's going to allow you to understand how much liquid capital you have available to invest and how much risk you can afford to take. You need to consider your investment timeline. Real estate investments are typically a long-term investment, as you well know, and your investment goals should align with your investment timeline. Consider your investment timeline and determine how long you're willing to hold your real estate investments. You need to think through how much risk you're willing to take in pursuit of higher returns. Assessing your risk tolerance involves considering factors such as your age, your income, your financial goals, and your investment timeline. It's important to strike a really good balance between taking on enough risk to achieve your investment goals while not taking on so much risk that you put yourself in financial security at risk. You should be striving for very specific and measurable investment goals. Once you've figured out your investment risk tolerance, your timeline, and your financial situation, consider factors such as your desired rate of return, your desired level of cash flow, and your desired level of capital appreciation. Your investment goals should be aligned with all the above. For more content on real estate investing and preserving your capital in retirement, make sure you go ahead and hit the subscribe button, give us a like, give us a thumbs up, and we'll get back to it. Seek advice from professionals. Real estate investing can be complex, and it's important to seek credible advice from professionals, such as financial advisors, tax advisors, real estate agents. These professionals can help you evaluate everything that I just mentioned. And by following these steps, you can determine your risk tolerance and your investment goals as a real estate investor and develop a successful investment strategy that helps you achieve your long-term vision. That strategy might include a mix of residential properties, commercial properties, and specialized investments like mobile home parks and parking facilities. Keep in mind that diversification is key to reducing risk and optimizing your returns. If you're closer to retirement and have a lower risk tolerance, you might opt for a more conservative allocation with a larger portion of your portfolio in stable income-generating assets, like a private real estate fund that allocates properties for a long-term perpetual hold. Be sure to stay proactive and on top of your investments over time. You need to manage them accordingly throughout the entirety of the holding period. Regularly review your portfolio and make adjustments as needed to adapt to changing market conditions and maintain capital preservation. This may involve rebalancing your portfolio, selling some underperforming assets, or just acquiring new properties to maintain a well-diversified and balanced portfolio. Regular portfolio reviews can help you identify any imbalances or areas of concern, such as an overconcentration in a specific asset class or a specific region throughout the entirety of the country. By addressing these issues, you can ensure that your portfolio remains well-diversified and aligned with your investment goals. Additionally, staying abreast of market trends and economic conditions can help you make informed decisions about potential adjustments to your portfolio. For example, if a certain real estate sector is experiencing exceptional growth, rapid growth, you may consider increasing your allocation to that area to capitalize on the opportunity at hand. When you invest in a private real estate fund, all this is taken care of for you. Why? Because let's face it, who has time for all this in retirement? You should be enjoying time with family and pursuing your passions. We try to help as many people as possible generate cash flow and build legacy wealth for them and their families, because that's what I'm trying to do for my family, and that's what you should be trying to do for yours as well. Again, real freedom through passive investing. Now you guys know how to preserve your capital in retirement using real estate investing strategies. Apply these tips and techniques to secure your financial future and enjoy a comfortable, worry-free retirement. Real freedom through passive investing. Have a great day, guys.